Are you ready for a game-changing trading strategy that leverages just 2 free indicators, especially in the light of the recent constraints on TradingView? So let's dive right in. Head over to the indicators section on the TradingView website and add the initial indicator called Extreme Trend to your chart. What's fantastic is that you can apply this strategy across various chart types and time frames. Once the indicators on your chart, you'll see buy and sell signals represented as triangles above and below candlesticks. But here's the catch. If you stick to the default settings of this indicator, I can assure you that it might lead to significant trading losses. Why, you ask? Well, it occasionally generates signals that run counter to the prevailing trend and churns out a slew of false signals during market consolidations. So before anything else, let's dive into the indicator settings and make the necessary tweaks based on my guidance. Now with these tweaks in place, let's supercharge your strategy. We'll introduce a 200 period moving average to the mix, and this additional will be game changer. It'll help us spot the current market trend and enable us identify signals that align perfectly with that trend. Consequently, when the candlesticks are above this moving average, it's time to weed out all those pesky sell signals. That's because the market is showing bullish momentum, and going against the trend would be a risky move. Conversely, when candlesticks form below the moving average, it's prudent to disregard those buy signals. Why? Because the market's leaning bearish, and opening long positions would mean trading against the prevailing market trend. Now let's take it up a notch and ensure your strategy shines even when the market is in sideways mode. Head back to the indicator section on the TradingView website and introduce the volume fight indicator to your toolkit. Remember, once it's part of your strategy, we'll fine-tune its settings to maximize its effectiveness. With these adjustments in play, you'll see the oscillator display different regions in white, green, and red colors, each with distinct meaning. White signals market consolidation, which means it's no-go for trading in both directions during these conditions. Red indicates bearish momentum, permitting only sell trades, while green signifies bullish momentum, allowing only buy trades. Now let's analyze these examples closely and see how effectively it identifies sideways trends in the market. You'll notice it expertly filters out all those unnecessary signals during these conditions. Now with all these factors considered, we're ready to establish straightforward rules for entering trades. First, let's take a look at for short trade rules. To kickstart a short trade, simply look for a red triangle positioned above a candle on the chart. Next, make sure the candle itself is red. In the following step, confirm the bearish trend, ensuring the price is below the 200 period moving average. Lastly, verify that the volume flight indicator also displays a red region corresponding to the signal candle. Once all these criteria align, it's time to enter a short trade. And when it comes to setting your stop loss, consider using the recent swing. And for exiting a trade and profit, aim for a minimum risk to reward ratio of 1 to 1.5 for your initial target. Now let's outline the specific rules for entering long trades. To kick off a long trade, keep an eye out for a green triangle positioned below a candle on the chart. Then ensure that the candle itself is green. In the subsequent step, confirm the bullish trend, where the price is above the 200 period moving average. And finally, make sure the volume oscillator showcases a green region corresponding to the signal candle. Once all these conditions are met, you're all set to enter a long trade. And when it comes to setting your stop loss, consider using the recent swing of the market. And for exiting a trade and profit, target at least 1 to 1.5 risk to reward ratio for your initial target. Now that you grasp ins and outs of this strategy, let's dive into the outcome of our backtesting. So after running 100 trades on the Ethereum chart with a 15-minute time frame, our win rate was an impressive 76%. To put in perspective, we secured a remarkable 114% profit from those 100 trades. What's even more noteworthy is that we identified these 100 setups in just 10 weeks. During the backtesting process, we achieved 5 consecutive wins in contrast to 3 consecutive losses, showcasing the strength and reliability of this strategy. So don't go anywhere just yet. Stay tuned for our next video. It's your golden ticket to success in the world of trading.